It was a relatively quiet day on Wall Street today until Fed Reserve Chair Jerome Powell dashed any hopes of an interest rate cut. At least that's how the market seems to have interpreted his comments on inflation during his news conference today. During their two-day meeting, central bank policymakers decided to keep rates unchanged. That was not a surprise, but speculation about the future sent Treasury yields higher and stocks lower. The Dow Industrials fell 162 points, about the low of the session, to 26,430. The Nasdaq was down 45, and the S&P was down 22. In Washington, Steve Liesman has more on what the Fed said.
Fed Chairman Jerome Powell tamped down market expectations for a rate cut at his press conference Wednesday, saying the drop in core inflation, which excludes food and energy, was less of a concern than many believed because it's likely to be transitory.
That the committee would be concerned if inflation were running persistently above or below 2%. We do see good reasons to think that some or all of the unexpected decrease may wind up being transient. If we did see a persistent inflation running persistently below, then that is something the committee would be concerned about and something that we would take into account in setting policy.
Powell pointed specifically to recent sharp falls in prices for financial services and for apparel that he believes will work their way out of the data in coming months, causing inflation to firm. Core inflation has fallen, however, for 3 straight months, even amid strong growth, and stands at 1.6% year over year, moving further away from the Fed's 2% target. Markets had come to believe that declining inflation could be a reason for the Fed to cut rates in coming months. But the immediate market reaction to Powell's comments was lower stock prices and higher bond yields as markets thought twice about whether that rate cut was really coming. The Fed in its policy statement made generally positive comments on the economy and the outlook, noting that the labor market remains strong and that economic activity is rising at a solid rate. And Powell in his press conference said some of the risks that have kept the Fed on hold have eased.
It appears that risks have moderated somewhat. Global financial conditions have eased. Recent data from China and Europe show some improvement. And the prospect of a disorderly Brexit has been pushed off for now. Further, there are reports of progress in the trade talks between the United States and China. The committee views these developments, along with the outlook for continued growth, a strong job market, and muted inflation pressures, as consistent with continued patience.
But Powell also made clear that while a cut may not be in the cards, neither is a hike. In the Fed's new policy of patience, the market will have to wait until the data more clearly signals the right path for rates. For Nightly Business Report, I'm Steve Liesman in Washington.